Hello, everybody. Welcome to the Transform Now podcast. I'm your host, Michael Marchuk.
And I'm Brad Hairston.
And this is our weekly pulse check of AI and automation news. Well, Brad, we've got 5 articles today to cover, and some are going to be a little controversial. So let's just jump into it, shall we?
Let's do it.
All right. So the first one is from TechCrunch, one of our favorite places to pull news from. It's actually some really, really good articles. WhatsApp changes its terms to bar general-purpose chatbots from its platform. Now, it's interesting that they've done this because, quite honestly, they're the ones developing, Meta is developing a bunch of chatbots on their own to be able to do interactions with people on Facebook and other things. So it's interesting that they've decided to ban these chatbots from their WhatsApp platform. So tell us a little bit more about why they're trying to do this and what does that mean for folks who are using it?
Yeah, Meta says, we like chatbots as long as they're from us.
Exactly.
We don't like other chatbots. No, this move makes sense, I believe. And it relates to what's called WhatsApp Business API, which they designed for businesses serving customers. So this is a little bit more nuanced than the article makes it seem. But Meta basically came out and said, we built that API for business to business use cases. But what they've seen in recent months is an unanticipated use case of serving general purpose chatbots from...
I can't believe this was truly unanticipated though. I mean, seriously, they didn't think this was going to happen?
I think anything's possible in today's world. But yeah, supposedly this caught them by surprise. So the problem with this obviously is this WhatsApp Business API is one of the primary ways that they make money. So they charge businesses based on their use of these templates that are provided, but there really wasn't any provision for chatbots in this API. So they weren't making any money on these. They didn't have an ability to charge for them. So Zuckerberg on the most recent earnings call, Q1 earnings call, pointed out that business messaging is a huge opportunity for Meta, and they want to maximize that. So this is a move that supports that, and they want to basically clear the way for them to get more revenue. So yeah, they're obviously going to allow the Meta AI chatbot to be used on WhatsApp, but they're not going to allow these other companies to do so. So now this doesn't affect businesses and they were quick to point this out. It doesn't affect customers who are using their own bot or chat bot. So for example, if you're a travel company and you're running a bot for customer service, you can still do that through WhatsApp. You just can't leverage ChatGPT or some other, commercially viable kind of competitor to Meta. So it's always interesting, Michael, to see how these big AI companies maneuver around their competitors. One day they're collaborating with them. The next day they're pushing them out. We should just expect to see this almost every single day.
Well, what's interesting to me too is that, and I don't know how they're going to address this, is when you have companies like, say, OpenAI and Anthropic who are releasing their own browsers that have the agents built into them. How are they going to address that? Because now there's chatbots that are in fact potentially chatbots, but sure, there's certainly agents that could be leveraging WhatsApp on behalf of me, my own agent doing that. Is that going to be something that's going to go into their terms of service or what? Or is this just API type of thing? So it'll be interesting to see how this plays out. But this doesn't go into effect until January 2026. So all of those chatbots that you've personally put in place, Brad, are good until then.
Well, that's reassuring. Thank you. I do want to say AI is getting into every single aspect of everything. So yes, we should assume that this is just one of many examples where these companies are going to have to say, okay, we're not going to allow our competitors to play here or here or here because we're losing revenue. We're losing, our dominance in this particular area. So, more to come on this front for sure.
Totally agree with that. All right, our second article is from Reuters, and it's talking about Europe now. So European small businesses rush into AI without basic digital tools, study shows. The basics behind this one is a firm called, a French firm called Quanto, did a survey of a bunch of small businesses across Europe and various countries to understand what's going on with their usage of AI and their readiness for leveraging these advanced AI tools. And what they found was a little interesting. So tell us more about it.
Yeah, so they found that the majority of these small to mid-sized firms were rushing into using AI. All their employees are using ChatGPT and Claude and, et cetera. And yet these companies don't even have the basics of digital infrastructure, things like video conferencing or intelligent document processing. They didn't mention it, but I would assume this also means no RPA, no business process management. So these firms they're void of all those technologies that have been around for a while, but they are rushing into leveraging AI and starting to depend on it and use it in, every aspect of their business. So this firm is kind of raising the warning flag and saying, this could, and I think this is maybe a little bit exaggerated, but they said this could threaten the economic future of Europe if we don't tap the brakes and get these firms to take a step back and basically do some basic blocking and tackling, make sure they've got the right foundation and the right infrastructure, and don't go too fast, too far, which I think is the temptation for these companies. That's kind of the point of this. They revealed in their survey that some countries are feeling very well prepared and they're doing better. Like Germany kind of stands out. But France, and this company that did the survey is based in France, they said that nearly half of the small to mid-sized companies in France feel very, very ill-prepared for this hoge digital shift. So at the end of the article, they make the company Quanto, however you say it, they make 3 recommendations. So we need to reduce regulatory burdens in Germany. I don't know why it's just Germany, but okay, I get that. We need to address skill shortages in Spain, okay? And then we need to overcome cultural resistance in France. Wow, that last one's that's a doozy. And I'm assuming they reserved that for France since the firm is based in France.
Probably.
And they wanted to land a left hook. But it is an interesting observation that they believe too many of these smaller companies are not taking some fundamental, they're not making some fundamental moves in the way they're investing, the way they're equipping their people. They're just saying, hey, it's out there, let's go use it, and we'll kind of learn along the way. So, something to take note of.
I had a difference of opinion on a couple things. So we'll start with the easy ones first. So they described Germany, relaxing some of the regulation in Germany, but their survey found that Germany was actually the most prepared in terms of the questions they asked. So it seemed to me like even with the regulations and the structure they have in place, Germany seems like they're doing pretty well. Now, that could get back down to the culture aspect of it. Maybe German culture is much more efficient when it comes to dealing with some of these other things. The other part of it that I think they glossed over, that these are small to medium in enterprise, so smaller businesses that are doing this. So honestly, it doesn't surprise me that much that you take in something like a ChatGPT or some of the other OpenAI or Anthropic or whatever LLMs, which are very accessible. So people can simply log in with a login ID and start getting information they need out of this and leveraging that for their business. It doesn't require an ERP system. It doesn't require document management. These are small enterprises. It doesn't say how small, but I'm sure you can imagine Joe's Bakery probably doesn't need a document management system. It might,
Right. Yeah.
but it's unlikely that Joe's going to be, juggling his document management system along with baking the bread for the next day.
Yeah.
So depending on how large these organizations are, I could definitely see Joe the baker leveraging OpenAI and logging into ChatGPT to find out what the best way to market his fresh breads to customers without ever asking for a document management platform or an accounting platform. They probably run everything off Excel, right? I mean, that's just kind of how these small businesses work. So in my mind, it didn't surprise me as much as they were leading on. Now, if you get to a larger organization and are still operating that way, that would surprise me a lot more. But because this was focused on small businesses, I wasn't as shocked as they were trying to make it sound as for this. So anyway, interesting article, but that was my observations on that one.
Very alarmist tone to it for sure.
Absolutely. Absolutely. So let's go to the Wealth Solutions Report. Again, something I'm sure that you read very often. This article is entitled, From Automation to Emotion, AI's Real Impact on Advisor-Client Relationships. Now, we had just done a podcast on this recently. I had a guest here to kind of talk through some of these aspects of the advisor-client relationship in wealth management. But this article kind of goes into a little more depth in terms of the specifics of how you might approach, leveraging AI to help enhance your relationship with your clients. Kind of walk us through that.
Yeah, early in this article, there's a quote which I think sums up the whole article really well. The quote says, "Clients want to feel understood, not managed." And as you said, you had a guest recently on the podcast to talk about this. We also had someone in our masterclass that was generated from our company earlier this year that talked about how the whole financial advisory segment is really being transformed with AI. I mean, the bottom line is people expect individual, personalized attention, and AI is going way beyond what CRM systems can provide to accommodate that. I mean, client expectations are definitely evolving. These generic, check-ins or updates from advisors, that's no longer the norm. I mean, they want you to make them, and the article says this, clients want to feel like you're thinking about them all the time, even when you're not with them. So by virtue of that, they're expecting advisors to come to the meeting and to have a point of view on things that are pertinent to them, to weave in the context of past discussions they've had, and to have recommendations around those things. All of that is very hard to stay on top of. It's very hard to be, to present in a timely way. But now AI is making that possible. So the article provides lots of great examples, spotting patterns and concerns before the client even voices them. That's something that can be done now. And it also touches on the very important area of compliance and governance. I mean, regulations are changing constantly, and just the way that these advisors are, guiding their clients and the things they're saying to them, the things they're not saying to them, there needs to be some guardrails around that and the way that it's positioned, and keeping up with regulations so that you're staying above board and you're not violating any new regulations. Very, very difficult to do unless you read, you're reading the internet 24/7. So I think AI has a huge role to play in making this job very different than the way it was in the past. And I would go even further to say much more valuable than it has been in the past. I'm not saying that financial advisors are not, they weren't providing value at all, but I think we've gotten them out of this, hey, I'm just going to show up and pat you on the back and give you a couple of pieces of advice, to now I'm really, really managing your story, managing your goals and your expectations. And I'm leveraging the power of AI to keep on the leading edge of that and really provide you the best service that I can.
And I think one of the things that this article didn't necessarily go into although I think it was kind of alluded to, is the fact that when we talk about wealth managers, oftentimes there's a specific floor or ceiling that you work with. Like, I'm not going to go below this type of client. If they only have a couple $100,000, I can't spend that amount of time because the amount of fees that I generate wouldn't necessarily be something that would interest me or keep me involved with. So as we see with everything else, very, very, it's very interesting to start saying, okay, we've got people who are very, very interested in someone who's got $100 million to work with, right? And that's because they're at a spot where they're able to spend the fees to keep them going. So I'm sure wealth managers who have somebody who's got $100 million invested with them know the names of their cats. I mean, they know everything about these folks. So again, it's not that they didn't have these capabilities before, but they were tuning them to their highest net value clients. So when we start looking at this from a different perspective, AI allows that floor to be even lower and to provide the same type of service that others are expecting who have traditionally had a much higher wealth value. So I think this gives that a more level playing field for folks who are trying to enter into that. And it also allows advisors to maybe say, drop that floor a bit more, allowing them to take on smaller investors, yet give them the service that they that these clients are expecting, with that knowledge of who they are and what they're doing. So
smaller investors like you and me, right?
Yes. When I take my two nickels and I rub them together and hope that it does something, absolutely.
Yeah.
Those
I knew you were talking about us, but that's okay. Go ahead.
So anyway, interesting to see how this goes here, but I really do think that this is going to transform the way that these relationships are managed over time, because that's really what it comes down to, being able to bring in those conversations of the past and really have some really nice connections that are still there, even if it's only there because the AI presented it to me 30 seconds before you showed up. At least I can review that kind of stuff and feel like I'm still connected to you through the conversation. So I thought that was a really good idea. And I'm sure we're going to see a lot more advisors leaning into this technology as we go forward.
Mm-hmm. Mm-hmm.
Yeah. So speaking of leaning, we have another article here from The Verge. And this one here is leaning the other way. So Amazon hopes to replace 600,000 U.S. workers with robots, according to leaked documents. And the way they say this is job losses could shave 30 cents off each item purchased by 2027. So even into the next couple of years, that they see some major savings. Now, this doesn't surprise me too much because, as you and I both know, these Amazon warehouses are extremely automated as they are now. They already have the picking robots and management robots that are pushing all this inventory around, scanning, et cetera. So it didn't surprise me all that much. I don't know where these 600,000 workers are coming from. Maybe you can help me.
Yeah, so I will explain that because, I mean, the way The Verge wrote this headline, they made it as provocative and shocking as they could. When you read the article, you find that they're not going to go out and displace 600,000 existing employees. What they're doing is they're adopting a strategy that's going to enable them to not have to hire 600,000 employees that are anticipated to support the growth that they're going to have. So Amazon has been growing at a consistent, shockingly large pace for years. So they can project and predict with pretty great accuracy how many people they're going to need. And so they're doing the smart thing. They're saying, how can we maintain that growth, but reduce the number of people we would normally have to hire? And when you're talking about Amazon, the world's largest retailer, you get to 600,000 pretty quickly. They are just to be more exact, they are working toward automating 75% of their entire operation in the warehouses. And as you said, that would save about 30 cents on every item that they warehouse and sale. I think all of us will appreciate that. As much as we use Amazon, that's going to add up for me and for my family. And they total all that up and say that they expect to save the company around $12.6 billion from 2025 to 2027. So But whenever you do this, whenever you are upfront about the fact that you're going to reduce your hiring by a number as big as that, you're going to get attention. You're going to get some criticism. But it's hard to argue with success. It's hard to argue with companies trying to be lean and mean and think more more progressively for how they're going to continue to support their business with less people, or maybe with the same number of people. If you think about it, Michael, IT departments in every large, Fortune 500 company, they do this every single year. They take on more work and more projects and more systems to support, but they're told every year, but you can't hire anybody. So you got to keep your head count flat, but you got to do more work, in the years to come, or they're told to reduce their budget. So in most cases, they're not they can't afford to reduce any headcount, but they've got to be leaner, more efficient, more automated in order to support the additional work without new heads. And so that's all I think this is. I think it's good strategic thinking. I'm not at all surprised that Amazon is doing this, or that they have the wherewithal to be able to do this, to automate 75% of their warehouses. As you said, they're already extremely automated, and you see videos of what they're doing in those warehouses, and it's shocking how sophisticated it is. So somehow they can go even further, and they can avoid having to hire so many people as they build more warehouses and they continue to expand. So kudos to them. I think it's great. Now, I did say one more thing. It did say that because of all the negativity, that Amazon's team is being very careful about how they're talking about this, and they're avoiding terms like automation and AI, and they're using the term cobot instead of robot because it's less controversial. I think all that's pretty funny, but if I were them, I mean, it's all about maximizing shareholder value and doing the right thing for your company. And I think this is in line with that.
And I think overall, as you mentioned, this is becoming the de facto standard for organizations like Amazon. Walmart's doing something similar. All of the large retailers are trying to do something similar. They're providing same-day delivery and whatnot. But in order to do that, they have to have extremely efficient logistics behind the scenes so they can find the right item you're looking for, pack it, and process it so that it can get out the next, within hours. And that requires either like an army of people or an army of robots that can work 24/7 and really accommodate this the right way. So they also mentioned in the article too, which is interesting, is that while they're pushing forward for all this automation, they're also hiring people. So they mentioned that they're planning on hiring 250,000 people for the holiday season. That's right. Nothing to sneeze at. That's a lot of people to bring on for the holiday season. And we see this with all the retailers hiring for their peak season. So it's not all automation, but there's still a lot of people involved in making this happen. And even behind the scenes, all that automation doesn't happen without people creating and architecting that kind of solution to allow them to grow. So it's a very interesting time that we're in now, and lots of opportunities for folks who are able to understand this technology.
No doubt. So
our final article today, and again, another one from a reputational that you often go to, is this site called iAfrica. So I'm glad that we brought this one to bear here. It's OpenAI launches Project Mercury to train AI for investment banking automation. So I'm sure all the investment bankers out there now are probably quaking in their shoes, especially with this iAfrica article. But tell me a bit more about how AI training on investment bankers is going to help me.
So this article was my favorite of the 5 for today, and one of the sources for the article had the quote, "This is OpenAI's first major foray into domain-specific automation for high-value industries." And I think that's well said. I mean, when you read the article, it's describing something that OpenAI is doing that's very different than most of the other things we've been hearing about and reading about in the last 2 to 3 years. So OpenAI has very quietly launched this new initiative called Project Mercury. And what they've done is they've assembled a team of more than 100 former investment bankers to basically extract their knowledge to train its AI to automate some of the very time-consuming, tedious tasks that are typically assigned to junior bankers. And many of these people, as mentioned, were former investment bankers working for like Morgan Stanley and JP Morgan and Goldman Sachs. But they really want to raise the bar. They want to teach OpenAI's models how to handle complex financial data and how to do valuation, how to look at early stage investment opportunities and to assess those. So this is a really, I think, interesting thing. And Michael, you can join this project, by the way, because they're looking for people who want to earn, I think it's $150
an hour. Yeah.
Yeah. So all you have to do is you have to complete a 20-minute AI interview. So you're not even talking to a person. You need to take a test to assess your financial modeling skills. And then if you pass those tests, you must submit one financial model per week in order to keep your job. So there is a litmus test here to see how good you are. But I do think, humor aside, I think this is a interesting move for OpenAI. I expect to see a lot more of this, really going for more industry specific automation that can help companies to do something really bold. Like in this case, have a new kind of like digital analyst, an autonomous digital analyst that these companies, can use on a regular basis. So they're not just using ChatGPT when they have questions or they can't explain something. They have a role on the team that is a digital analyst that's provided by OpenAI in this case, who can do all these things that a junior banker, a junior analyst would typically do for them. That could be a big accelerator for a lot of these companies. I mean, a big cost saver, but also help them maybe speed up some of their cycles. When they're doing valuation for a client or they're helping, trying to help close a deal. This could make a big difference. And the article mentions that Citigroup and others have recently rolled out AI platforms that are kind of in this direction. Maybe not as full bore as what OpenAI is trying to do, but they use that as an example of, hey, AI is becoming part of the mainstream in these big companies. Let's give them something that is specific to what they do and really, really gets their attention, and then thereby would drive more revenue for OpenAI. So I think it's fascinating, and I think it's the first of many examples like this that we're going to see in the years to come.
I would agree with this trajectory that they're moving. If you look at the way that ChatGPT or any of these platforms is being used currently, it's a generalized platform that you can approach and ask non-specific questions to, and it will come up with some answers. Yep. It may have some domain knowledge embedded in it. It may be able to point you in the right direction to other domain-specific knowledge. But to have this kind of training allows them to take the base level of their platform, which can do the understanding of the questions and maybe formulation of some maybe interesting ways to look at the data, but then really focus in on a domain that is likely going to put a premium on those types of things. So instead of you and I spending $20 a month to be able to use ChatGPT, or if we get really, really good, we decide to splurge and go $200 a month, that there's a value there that exceeds $200 a month. And it's very likely that these organizations like JP Morgan and some of these other banking or institutions will see that value and say, that's worth $10,000 a month for us to be able to accomplish this, because it allows us to have, do the work of 50 junior bankers. That's definitely worth $10,000 a month for our organization. And that really, leverages the power of that domain expertise where there is a premium because there's this domain knowledge that is built into it. So I applaud what they're going with this. I know still they're not profitable. OpenAI is still bleeding money pretty badly, but the idea is that I think they're headed in the right direction. And if organizations that are either competitive to OpenAI can see how this might play out, there could be some battles there for organizations that already have that domain experience and just need a platform on which to put it. So it'll be interesting to see how this plays out, but definitely an interesting project for sure from OpenAI.
$500 billion valuation and
Yes.
not making a profit.
I know. That's San Francisco for you in terms of
These are the
way
days
that
we live in. Yeah,
the
exactly.
valley values these things. Exactly. So anyway, that's all that we get for today. This week's Pulse Check has had a really good conversation here on these 5 articles, but we'll make sure we have links to all these articles in our show notes. And as we said earlier, there is a great article or a great guest that we bring on every week who can talk through things in a much more detailed way than either Brad or I could, even being prompted by our AI. So we'll tune into those as we go, and we'll catch you on the next week's Pulse Check. Thanks.